Hi all, and welcome back to another episode of the ICIS Energy Foresight podcast. It's the end of 2025, and it does not really seem that markets are ready for the Christmas break yet. We see the price of TTF, which keeps declining. Carbon, on the other end, is flirting with the 85 euro per ton resistance, and obviously power, depending on which market we're looking at, is going and living all of these different dynamics at play. This is a special episode. We are going to look at 2026. We've just launched a new 2026 energy outlook, and I have with me Andreas, Lewis, and Matt that will help us go through the main bits of that report and what we expect for the different commodities in 2026. Hi, guys.
Hi there.
Hi, Matteo.
I'm Matteo.
Andreas, let's start from the gas side, which is probably the one that is very dynamic at the moment. What is, our big prediction for 2026?
So on the global LNG side, we do see some new supplies coming, but also there's some limited demand side response, and that means global oversupply. The market is talking a lot about it. It's not coming necessarily next year, but it's extremely short, the market in the first half of the year, and then it's rather turning long towards the end of 2026. And for Europe, we see upside risk for the prices, potential upside risk, and there's an asymmetry, so the potential to the upside is stronger than to the downside, and we attribute this to a potential economic recovery globally. So LNG markets get a bit shorter with Asian demand, especially Chinese demand, returning to previous levels. There's a global economic recovery. We see US gas prices coming up as well, and this is all lifting the global price levels. On top, we have very strong European LNG imports. We're beating another record next year, and this in times when gas storage levels are rather at the lower end of the historic range, so pointing to some tail risks in case of a cold winter. And all this implies that we are rather bullish for TTF markets, especially towards the early part of 2026. And then it's a bit different for the summer period, where Asia is at premium to Europe in our forecast, and then returning again for a TTF premium over Asia towards the winter, the subsequent winter.
And the bearishness on the gas side is not exactly what we are experiencing on the carbon side, Lewis, right? So we see prices already flirting with 85 euro per ton, and which is like quite a resistance. But there is an expectation which is rather bullish for 2026. But what's our prediction for the next year for carbon?
Yeah, the bull story for EUAs is definitely the market consensus, and we align with that. Our big call for next year is that the EUA market is going to test the 100 euro per ton level in the first quarter of next year. I think there's potential for the front December contract, the December 26 contract, to print a new all-time high. And I think that Q1 is going to be where we see the peak of the price action in 2026. I think we'll print the yearly high in Q1 and then see some consolidation for the rest of the year as the policy process and some key risk events begin to kick up in the second half, which I think could ultimately temper some of the bullish narrative for EUAs as we move forward. But the fundamental story for EUAs is very strong. You've got big supply cuts next year, around 170 million tons of supply reduction, paired with very, very limited flexibility when it comes to fuel switching in the power sector. And we quantified this recently with the power model, where we simulated the power market with an EUA price at 100 euros per ton versus where we were when we ran the model, which was around 82, 83 euros. And that unlocked just an additional 10 million tons of emission reductions for a 20 euro increase in prices. It's really very limited, and this does massively exacerbate the tightness for next year. So we're bullish. Q1 is where we're going to see the new high for EUAs.
So Matt, there is, on one side we've got gas, which is bearish, if you want, with upside potential on according to what we see in terms of fundamentals. But yeah, the market is plunging at the moment, or is weak, if you want. On the other hand, we've got carbon, which is a rather bullish story, as Lewis just said. What about power, which is the synthesis of all of these?
Yeah, indeed. Power is very much stuck in the middle between what's happening to carbon and what's happening to gas. And I think it depends what market you're looking at in terms of the price direction that you're seeing, whether you're a more coal and lignite dominated country like Germany or in Eastern Europe, or a more gas dominated one as we see in the rest of Europe. But looking forward to next year, I think carbon's the key driver to watch. It's not being factored into any forward curves at the moment, which just trades in line with the DEC 26 price. So if the bullish view that Lewis just presented on carbon is correct, then we can certainly say that markets are being undervalued at the moment from a power perspective. And if we were to get at the same time as that, a reversal in the trend of gas. So in Q1 next year, we had both gas and carbon moving higher. Then certainly that would present a very bullish picture for European power prices at the start of next year.
Thanks, Matt. And I think, if we join up the different notes, there's bearishness on the gas side, bullishness on the carbon side, and we believe that will drive more upward power prices. What is the counterfactual of that? What is what are the biggest risks behind our takes? Luisa, let me start with carbon. What could go wrong?
Yeah, it's an interesting time to be asking the question, because I think when everyone is bullish, some will be looking in the other direction and trying to be the contrarian. And we have to ask ourselves the question, what can go wrong? Inherently, the EU ETS is exposed to policy risk, and I think we shouldn't underestimate how much the EU ETS is asking of European industry right now, especially at a time where they're facing new pressures on a global competitiveness side, and things aren't easy. So we know that the EU ETS is not shielded completely from policy risk, and I think if there was one, say, challenge to our bull case for next year, it is a wider spread emergence of pushback around carbon pricing in the EU ETS, especially at higher levels around the triple digit mark, 100 euros per tonne. And this could come from member states kicking up a fuss. We've seen it before, but we could see stronger pushback this time. And it could ultimately materialize as some degree of market intervention, maybe in the form of the European Commission using some flexibilities they have within the current legislation to push more supply into the market to ease the balances. This is something that we're looking at right now as a potential risk that could play out in the second half of next year. And to the extent where that policy risk is present, that leads to the market losing some conviction in the bull case, then ultimately we could see participants such as those in the speculative community that are holding a lot of length in EUAs right now begin to take more risk-adverse positions and maybe liquidate some of those holdings that they've accumulated at the end of this year.
What about the gas market, Andreas? So we are slightly more bullish than what the market is at the moment. What could change, or what could undermine our view?
So a big game changer for gas markets is the situation in Ukraine and the negotiations about a peace deal or ceasefire. And that's driving sentiment, and that's what speculators are currently trading on. And although the fundamentals are not very strong, so we're speaking of 3 to 5 BCM export volumes from Europe to Ukraine, from Western Europe to Ukraine, still the market is really trading a lot on the sentiment around this. On top of this, the EU-Russia ban and compliance with that is a key uncertainty as well. So will the roadmap be stringent on volumes coming via Turkey from Russia? This can easily affect some 7 BCM or so. And that's a driver for the fundamental balance in Europe. On the global LNG market, we believe Asia demand risk is a significant thing to watch for next year. So China is returning, but the growth rate remains a bit uncertain. So we are forecasting 75 million tons imports. That's an 11% growth for next year. but this could go either way, up or down, depending on the recovery of the Chinese industry, and that has a massive impact on the global LNG markets, certainly.
So, Matt, there is the flip side of our prediction on the gas side is bearishness, which is probably even more bearishness if you want to compare to what we are seeing now. The same is true on the carbon side. Lewis just said that obviously there is a bearish risk linked to political intervention and some loosening, obviously, of the pressure on the carbon side. Is there an equivalent bearish case for power, or is like data center and AI gonna make it just a bull case for power no matter what?
No, it's definitely true that if we get bearish gas and bearish carbon, then power markets would follow that down. Fossil plants are still setting prices in the majority of hours, and though data centers get a lot of attention, they're still a pretty small component of power demand. So I don't see them being in a position to significantly change things in 2026. But the other thing to look out for is really the weather as the key driver of power markets. 2024 was a story of record hydropower all across Europe, which was bearish for prices. 2025 was a story of very poor wind speeds, which has pushed up prices all across Europe, despite the fall in gas prices. So what do we expect in 2026? It's, you can't really tell the weather this far in advance, but if we were to get some very cold spells or very warm spells, or indeed trends in hydropower and wind that were atypical, then that could certainly be a big price driver again next year.
Thank you all. I think it's been a great year. We've seen a lot of things happening on the energy market, and I'm sure that there's a lot coming ahead. If you want to know more and you want to have obviously access to the report that we've just published, it's called 2026 Decoupling Dynamics, just please reach out. I'm more than happy to obviously point you in the right direction and share it. For everything else, Merry Christmas and great festivities to all of you, and we'll see you in 2026.